Hey, good afternoon, traders. This is James with Strategy Vault, and happy Valentine's Day. So this video will be pretty short, and actually, just to let everybody know, we're going to be on the website. We're going to be adding a whole section on trading the Asia session in reference to tips and strategies and things that you need to watch out for and look for. So this video right now is just a short commentary on our trading last night. We're going to point out to you on the chart what we saw, why we took the trades, why we exited the trades, and we're going to try to make this an ongoing series, at least 2 to 3 times a week, so you will be able to learn and earn at the same time. So with that, let's roll our disclaimer. Okay, traders, this is our disclaimer, our risk disclaimer. Make sure that you read it, you understand it, and also understand that you will see it every time that we put together a video or a commentary or an advisory or anything of that nature in reference to trading the financial markets. The financial markets are risky. You can and will lose money. Per the CTFC and the SEC, we do have to advise you that we are not professional financial advisors. So take a few seconds and we'll get started. Read that and we'll get started. Okay, so I'm going to advise you right now, we will be pausing the video to bring up different screens to change the size of the recording area on our screen. So bear with us when that happens. So what we have in front of us is the 15-minute Aussie US dollar chart. So how in God's green earth do you figure out when to enter and exit a trade with this in front of you? So hopefully we're gonna simplify it for you and show you exactly what we're doing. If you've taken any of our training or you are a member of our group, our Slack group, and a paying member of Strategy Vault, we have an Asian session training that is up, and this will be added to it as well. And by the way, paying members, this is going to be, we're going to share this with our free members in the group. You will have a private link to it in the members area on Strategy Vault. So back, so you can access it anytime. So back to this puzzle in front of us. Our job, in reference to the training that we put out, our job is to figure out the box. And the box is where price is going to go and retrace from during the Asia session. So how we're going to start out is this in front of you. I mean, if you don't know what you're looking at, it could be very overwhelming and super confusing. So we're going to start out, and we're going to start to try to make it easy on you. So the first thing we're going to do, like I said, this is a 15-minute chart. The blue perforated lines here are the session breaks, meaning right here is the end of the New York session. Okay, end of the New York session. Okay, that's all we have on there. Okay, so like I said, to make this easy, we're gonna show you a couple things here. What we're looking for. Okay, so first off, let's see if we can go ahead. We're gonna change this to hike and ashy candles. Doesn't that make it look so much better and easier to see things? It's still confusing, but it's better. You can see and judge which way price is going to go. Okay, so now as we are trading the Asian session, we're also constructing our box, or analyzing where we believe the box will form and where it will stop. tops and bottoms. Okay, so next I'm going to turn on all the drawings. Now these drawings on this chart are accumulated over the past few months. So I'm going to turn them on, and then I'm going to explain to you what we are looking at and looking for. Okay, so actually that we were tracking a trend, so we're going to go ahead and we'll just get rid of that, so it's not to confuse you. Okay, so in front of you we have, let's see if we can roll that down, this week's, bear with me, Asia session, Monday through Thursday. Okay, this is what we trade: Monday, Tuesday, Wednesday, Thursday. Why do we not trade on Friday? Because it's not open on Friday. And I know that that's common knowledge to everybody that's been trading for a while, but in case you're new, there is no Asian session on Friday. Why do we not trade on Sunday? Because the market is readjusting on Sunday and starting its cycle. Okay, actually there are some good strategies that we're reviewing right now in reference to trading the gap. If you have not heard of the gap, that will be coming in our training in the subsection for Asian session training on Strategy Vault. So now what I want to show you, and I'm going to blow this up, is we're talking about yesterday evening's trading, on Thursday. So excuse me, bear with me, I'm just going to readjust this so you can see it. So what we were doing during the trading session is we were drawing this box. So how do we even know? Okay, let's just scoot this over. So this is all, let's see, you're gonna see. And actually I left a clue on here, but that's okay. So this is what we see when we start analyzing this chart and trying to figure out. Remember, our jobs is we are per se like detectives. We need to look for signs and clues on where we believe that price can go, make a judgment, form a bias, and then we go from there. Okay, so this is what we were looking at before we even saw the box, before we even saw where price was going to go. So what we're looking for, and actually all these lines on here, these lines have been drawn days in advance. So what we saw right here was, first off, we saw the M pattern, okay? And then this right here is a fake out. This is a fake out that the market makers do to make all the people, so they shot price down here, hit everybody's stop losses, okay? Then they start moving price right back up and make everybody think, well, it's turning around, it's gonna go up. And then they slam it right back down, which is fine. Okay, as long as you know, I would advise you to study market cycle, 24-hour market cycle or the weekly cycle, and you will learn so much. Now, will you be able to see this all the time on your charts? No, their job is to hide it from you. So if I took away these boxes here, and I'm just going to do it really quick, I take away my boxes and my lines, this is what the normal person sees. Now, people that have been trading naked charts for quite some time, their eyes are trained to see this, which the normal person, such as you and I, the working class individual, you don't see it. You can't see it. Okay, so that's why we use our tools. So like I said, back to figuring out where the box is going to form. So the first thing we saw was this area right here. This area came up and bounced off this line. So this line was drawn on our charts numerous days ago. And I'm going to scroll back and I'm going to show you how far. So And actually what I did was I marked it. So let's see. This is last week. We're still going. I marked it on our chart to show you how long ago we drew that line. So we're still going. Okay, so okay, I lost my line. So right here, we drew this line. Why? Because price bounced off of it and turned around hard right here. So back on January 30th was when this line was drawn on our charts. So, which is good, which if you accumulate drawings on your chart and keep track, then price always goes back to that line in one way or the other. Okay, so this is where we drew this line, and this was from another trade and another analysis days before. Okay, so here's why we saw this line. Okay, so this line right here, price bounced off the line. Remember, this is a 15-minute chart. Okay, so as you can see, there's a lot of consolidation at this line, which makes it even stronger. This is consolidation. Okay, so let's just follow that line back to where we look at here again. Look how many times price bounced off that line. So we know that's a strong level. I probably just lost my line. I bet this is the line. So anyway, price bounced off that line right there. That's what's kind of hard to follow. So so what we look for is where price has been, because just like the old saying go, here it is. History repeats itself. Okay, so once again, here's our line, and look how price reacted at the line. Now that was last Tuesday, Wednesday, right? Okay. Oh yeah, I'm sorry, I lost the line again. Here's our line. Okay, so price reacted right off the line, right? Okay, so we have that line. Price reacted right there. So that now I'm not saying the line is an exact number. It is a level. We look at the level. Price reacted right off of this area or level, and it shot right back up. Okay, so at this level, price was support. Right here, and it comes right back up. Now we scroll on over into this level, and price becomes resistance. Or I'm sorry. The level becomes resistance on price. So as you can see, it shot up and it shot right back down. Okay? So which brings us to yesterday evening. So before we even saw anything past here, actually I'll show you. I'm just going to move it over. So this is what we saw. This is what we circled. Okay? Why? Because this is price coming right back up to our level here, here, and numerous areas on down the chart. Okay? So that made us form a bias. And when we started our trading, price was way down here. Right there, 1800, which is, I'm sorry, 1900, okay? 1900 is what time we start trading the Asian session. So we watched price, and now this is where we start. This is just a tool in our toolbox. So on our other chart, which we share with you as far as how we monitor the trade, we watched price. And we watched it, and we got down here. We saw our setup, which, as you can see, this other line here, this is, so we had a hypothesis, if you will, where price was wanting to go. Up in this area here. Okay, so we saw down here how many times price bounced off this level. As you can see right here in front of us, once, twice, shot all the way down here, shot all the way back up in a 15-minute period or a half-hour period. But look back here. Look, okay, so look over here. So we knew price was going to turn at that level, and that's right where we started our trading. So in our video for trading the Asian session, we start out, we tell you what they're going to do. So they're going to come out. They're going to come out at the open. They're going to, now this is what they try. This is not 100%, but this is what what they do, okay? Or what, how do I put this? So what they do is they shoot it up 15 to 25 pips up, or they shoot it down 15 to 25 pips. And that 15 to 25 pips is not an exact figure. It is just a ballpark. So we know that they shoot it up. So we know that we're down here at support. Support has held here numerous times, and actually, look today. Is that today? Yeah, today. Look how many times support held at that level again. So we know we're at a good support level. Okay, and we also know, we also look for the highs and the lows of the day, and this was at the, almost at the low of the day. So a lot of times they'll either shoot it to the high of the day or they'll shoot it to the low of the day, and then they will turn it around. So in our trading, we told you that their job, the Asian traders or the people that trade in that session, that work for the market makers in the bank, their job is accumulation. So a lot of times it's going to range. A lot of times it's going to shoot right through. But this is what you have to monitor. So right here at this area here, I'm sorry, right here, we're watching for our setup. Okay, we called a trade to sell the 67.20, expiry at 11 p.m. And actually, if you want to bear with me, I will show you what it's what kind of information you receive in our Slack group in reference to being notified of these trades. So bear with me here. Okay, traders. So what I wanted to show you was, this is our Slack group. This is, we called the trade up here at 6:03 p.m. Now this is Central Standard Time, so actually it'd be 7:03 p.m. Eastern Standard Time. So we gave our notification. We told them, our traders, to wait until we saw our setup. We gave them a heads up, and then we told them when to go. Then we posted at the price that we got in at, which was at $36.50. We advised them to meet or beat our price. And then this was a 3.5 hour trade. No stress. No stress. That's what we shoot for. We, you know, the Asian session is a very stressful session, so we try to make it as stressless as possible. So we watch our trade, and then 50 minutes, approximately 40 minutes later, we were in profit. Okay, that means it moved all the way up to our strike price. Okay, and then we monitored it, and then another 40 minutes later, we were out at 63.50. Now remember, we trade 3 contracts. So 63.50 minus 36.50 minus your $6 was our profit on that one trade, and it actually was at it was a nice profit for that first trade on a Thursday. And Thursdays are very hard to trade on the Asian session because it is their Friday, and after their lunchtime, things really go to the wayside. Okay, so we got out at 63.50. We continued monitoring it. We told our traders again, if you're still in it, it's at $69 and a turn level, meaning it was getting ready to turn. And it did turn, which we will show you. Okay. Also, we had news coming in 5 minutes. Okay. So now we're going to go back and show you what we saw and why we got out of the trade and why we advised the next trade. Okay, so now we're back in the chart, and what I want you to see, so our entry was about in this, well, actually, right on this candle right here, which remember, we use a whole different chart to monitor the trade. Okay, so we got the setup that we wanted, and then it turned, and it did exactly what we wanted to. Okay, we got to here, we advised that it was at our strike rate, okay, which is a 67.20 was our strike rate. And then it came on up, and then 30 minutes later, on 2 candles, we were right at this area. This right here is what we saw and why we exited the trade. So as you can see, my favorite pattern, you could call it, that I look for on the charts is these double fangs or spider fangs. You know that's in that half hour, price is being rejected and rejected, and then it turned around here. This was during the day, and it turned around and came on down. Okay, so we got up to this level, and we advised that this is where we got out. Okay, and we advised our traders that this was going to turn, and it did. It turned sharply, but then it came back. Okay. So then it came back up to this level. Now, this is where it was at approximately $69 to $70 a contract. And we advised again the price is going to turn. Why? Because we're at this level here, this level of support, which now, once it comes down, becomes a strong resistance. Okay, so now what we did is we advised to get out. I don't know who got out. I know that we were out, which is fine. We saw the price was going to change. So now we called a sell. And actually, if you bear with me, I'm gonna show you that in the Slack group. Okay. So now this is the notification of our second trade. Yesterday evening we called a sell for AU, the 67.22, with an expiry at 11 p.m. We told our traders to wait until we saw our setup. So as you can see, I'm looking for the time. I don't see any time. We told them to go. We were in at $68. That was our last trade of the evening. And actually, what that trade did was it came on up. Oh, I think we called it at around the 67.27 level. It came all the way up to the 30, and then it turned around. So, as I said, we advised what the price we were in at. We advised meet or beat our price, and then we notified them that it was in profit. So as you can see, in less than 13 minutes, the trade went in our way. Okay, so okay, I can tell you exactly what this is. So this is that red doji spike down. So it was in profit, and then 2 minutes later it turned and it shot right back up. That's okay. We told them it's okay, it's going to come back. Now, are we right all the time? No, but we had some good analysis on our chart. We could tell what it was going to do. And actually, when we get back to the chart, I'm going to show you what we saw also that kept us in that trade. So anyway, so this is 9:07, so it's 10:07 Eastern Standard Time, and we took that last trade, so we continued to monitor it, and we stayed trading until 11 o'clock Eastern Standard Time. So at 9:54, the trade went in our favor again, and it spiked all the way down to 21.97, or I'm sorry, 67.21.4. In the last few minutes, we saw our opportunity. We got out, because I'm going to show you why, exactly what happened. Okay, back on the chart. So remember, we were talking about price turned on us. It's right here. Price turned. I'm sorry, hold on. Price turned and then shot right back up here. This is in this. Oh, it wasn't quite an hour, but we knew that price was going to turn and come on back down. So our expiry was at, it'd be this candle right here, 2300. See, price shot all the way down here. On this chart, it says 67 or 67.19.8, but Nadex was showing 67.21.3 or 4, something to that matter. And then, which we got out down here by watching our other chart on where we monitor price and gauge the strength of the move, and then it came all the way back up to here. As you can see, there's that 21.5, but in actual reality, Nadex showed at the close of that candle 67.22.2, 2/10 of a pip, and it would expire full in the money. That's the game we play. That's the difference between the regular exchanges and Nadex. It is what it is. We got out when we needed to, so it did not expire full in the money, but that's what we do. But anyhow, and then price came on down right back to almost to where we started. Okay, but another thing is, what else do you see in this box? So we drew our box. We knew where our box, when this candle formed, we knew we had our box. We knew, actually I could clean that up just a little bit. I could bring it up to the line. See, the line that was drawn days ago. Actually, I'm going to show you. Can we do that? Bear with me. Okay, I'm going to unlock it, because so the line that we drew days ago is exactly the low of the Asian session. Right there, our box, a beautiful box. Now the next thing I want you to see, if you look at Thursday and you look right over here at Wednesday, you got your spike, your drop, your spike. They're pretty similar. Look at the size of the box. That's another thing that we look for, is the size of the box, which we can count the pip movement. Pretty close, pretty similar. I bet a few pips off. So, like I said, our job, and when we start analyzing our chart, we start, right after the New York session closes, we start analyzing charts, and we also look and watch price action. What is price going to do before the Asian session closes? Okay, because as you can see, it totally went opposite right here, and actually right over here. Sure, it came on down, but it went opposite. Okay, so is it always going to do that? No. It's never going to act the same. But the point that we're trying to make is you need to look for clues and hints and levels. And if you start marking your charts now, history or chart history will repeat itself at one time or another. Okay, so how we mark our charts, day of the week, the size of the box. There's a lot of things that we look for and look at, but we're only getting better, and you will just as well. So anyway, guys, I'm gonna get out of here. This is James with Strategy Vault. Looking forward. Hey, by the way, Monday is President's Day, so no trading on Monday. Sorry, guys, but I just totally lost my train of thought. I'm out of here, guys. Just wanted to share this with you, show you what we look for, what we do, the profiling, the chart profiling that we do, and look forward to seeing everybody on Tuesday. So everybody have a great weekend. Had a good week. There was one day we were down, man. The internet crashed on us. So we couldn't trade on Wednesday, which would have been a repeat of Thursday. We had a great day on Tuesday. I'll post the stats in the group later in reference to our profits and losses. But I'll tell you what, this is week 2 Trading the Asian session, and we are in profit. So as always, everybody trade positive and God bless.